This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today's 6/10/21, show number 283. So CPI numbers coming in, Nick?
Yeah, we had the CPI number out this morning. Came in slightly hotter than expected, 0.6% month over month. The core CPI, which excludes food and energy, climbed to 0.7%. This number could be the catalyst for the early pop in bond yields today, but since that pop in yields on the 10-year note, it has they have gone back down. So yields now are still back to flat, but they did jump earlier today on the back of that news. And honestly, Kerry, we're seeing a market fade right now too. So we'll have to see where today winds up. But S&P 500 made a new nominal high off of that hot CPI report. But now as traders get settled in, we're seeing a little bit of a fade here. So it's going to be an interesting close today.
All right. Jobless claims. What's going on here?
Yeah, jobless claims declined by 6,000 to 375,000. That's pretty much in line, but that's the lowest level since March 14th of 2020. And then you had continuing claims for the week ending May 29th. They decreased by 258,000 to 3.499 million, which is the lowest since March 21st of 2020. So this number seems to be trending in the right direction. Yesterday, we also had the JOLTS report out, which is the number of jobs that are available, and it was over 9 million. So there's plenty of work out there if people want it.
Yeah, if they will stop paying people not to work. That's kind of the problem here. You know, the world works in incentives, Nick, and when your incentive is not to work and you can make more money staying home than going to the job, what are you going to do?
You're going to stay home. And honestly, I don't blame people for that because they're just gaming the system like the system has been gamed on them. So I get it. I understand how it works. And, again, they got to get rid of that rule. I mean, stop paying people to stay home.
Yeah, and certain red state governors have already done it. I know our governor is on the way to doing it here. First, they started saying you got to track all your job hunting because they suspended that rule during the pandemic because there were no jobs to be had. But now they're starting to roll back. Of course, Congress would like to make it a permanent entitlement and just turn unemployment into another welfare program, which,
doesn't surprise us, right?
Well, how could it? So S&P 500, so new high, huh?
A new high, but I got to say, Kerry, as we speak, the markets are fading. So early this morning, the S&P 500 made a new nominal high. I mean, it wasn't by much. When you look at the S&P 500 today, it got as high as 42.49. And on May 10th, I believe we got to 42.38. So we made a new nominal high, but we are fading right now. So I think we got to really see where the close takes us today. And by the way, this morning, I don't know if anybody knew, but today's a new moon, and it's also a solar eclipse. And sometimes you'll get, big moves in both directions, and you got to be very, very careful during a lunar phase like this where you have a solar eclipse. So we are seeing a very good fade in the markets right now, which, the markets were up. The Dow was up over 200 points earlier, just up 60 points now. And we'll see where we close today. That's really going to be the tail of the tape.
Interesting. And yeah, well, to see a new high and then to see it fade, yeah, well, maybe there's something to it. What about our meme stocks here? Are they still doing what they're doing?
Well, we had GameStop report earnings last night after the closing bell, and that stock is getting hammered today, down about 13% now. So it's really started to accelerate, down 40 points. Again, nobody should be surprised. They're not making any money. I mean, this is just, kind of a joke that it goes up on a short squeeze time and time again. But all of the leading meme names, AMC, COS, they are all lower today. Recently, we've had some other meme names like Wendy's. That is getting hammered today as well. That's down 4.5%. So we're seeing the meme stocks really come in today. And again, this is probably on the back of the GameStop news. But, like we've been saying, these stocks are not moving up for any fundamental reason. They're moving up because there's an imbalance in the short position and somebody's able to take advantage advantage of that.
Interesting. Well, the market never ceases to amaze, does it?
It never does. It never does. Something else I'd like to add today, which I'm just picking up on my radar over the last hour, is that the home builder stocks are really under pressure today. And this is a very, very interesting industry group because really affects so many different areas. When the home builders are doing well, the housing stocks are doing well. That means Home Depot will do well. That means Lowe's will do well. That means Sherwin-Williams will do well. You have so many different companies that get affected by the housing market. But today we are seeing pretty good distribution in a lot of these home builders. Toll Brothers, in fact, is down over 4%. And these stocks are now testing very critical levels. So this is a good industry group to watch. If this industry group gives it up, there's going to be repercussions really across the board. So this is an industry group that's treading water right now at a very big support level. But going into the end of the week and even into next week, it's a group to keep on the radar. It'll be a very good tell for what the markets are going to do going forward.
Yeah, I was going to ask you about the home builders too, in fact, because the inflation in construction materials, copper, which isn't that big a component, but lumber, which quadrupled. So maybe now it'll lose 50%, but it'll still be double where it was. Got to spell trouble for the home builders, doesn't it?
Oh, absolutely. They can only pass on so many costs. I think I talked to a home builder here. He said the average home he was building in materials is about $35,000 higher than what it was 6 months ago. So that's dramatic. If you ask me, that cuts into the margins, especially when you're building them in mass. So there's definitely an issue there. And, but the Fed says it's only transitory.
Yeah, it's just like life. One man's transitory is another man's death sentence. So let's just keep that in mind. But, it's so interesting to see the inflation has ramifications and unintended consequences all over the place. So keep that in mind. So finally, gold and silver getting a bit of a slam today?
Well, not really. I mean, when you take a look at gold futures, they're down $4. Interestingly enough, gold miners are up. They're up about 0.8% today. So we're seeing gold pull back a little bit, which is good. I think I've been telling you on here that I'd love to see it just go sideways. I don't really need to see gold break out right now. I love the pattern that's in there, by the way, for more upside. But gold miners today are, interestingly enough, getting a little bit of a bid. And, I find that to be gold miners take leadership. That bodes very, very well for the precious metal itself. Right now, the precious metal has been leading the gold miners. So we start to see the gold miner leadership start to show strength on the charts compared to the gold chart, then there's a lot more upside in gold.
I should have said they reversed, because when the last time I looked at them like 3 hours ago, gold was absolutely getting slammed, and so was silver. And now they've rebounded and they're partly in the green. So upside reversals, always bullish for the metals.
Always, and we see that a lot with the gold price. I mean, sometimes they get hammered early and then they come back late in the day. We see it so often, time and time again. But the chart patterns are good right now for gold futures. Chart pattern is very good for gold miners. It's just really pulling back from a consolidation and forming a bullish consolidation pattern. And I love when charts do that. That's my favorite setup in the world.
Bet you do. Well, hey, we could talk about one other asset class, but I don't particularly see any reason. There's nothing that's really happened with it over the past 2 days. It's rebounded a little bit. It's obviously bouncing around, but we'll talk about it tomorrow on Friday when hopefully we'll have a better, clearer idea. But again, it's set up. The asset class not to be named at this moment is setting up for a broader decline. It could potentially pick up speed, but we'll talk about that tomorrow, Nick. In the meantime, find out how Nick does it. Go to inthemoneystocks.com and subscribe. The Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Send your emails. We will get to them in the next couple of days. KL@KerryLutz.com. Don't forget, we're going to be doing a summer fade ourselves. We'll be doing the show 3 times a week, Monday, Wednesday, and Friday. So just mark your schedule accordingly. And Nick, we will talk to you tomorrow on Friday, where who knows what can happen. All hell could conceivably break loose.
We'll see tomorrow.
Right, at any moment.
It can.
All right. Thanks, Nick. We'll talk to you tomorrow.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds @ITMS and @NickSantiago01.